if that text is on the bottom or is on underneath the images on the YouTube channel. That's your job. One job, man.
One job. One job.
Yeah, that's it.
Well, I've got a job, have I?
Yeah, you have.
Have I? What have I got to do?
You've got to have a look underneath the image on YouTube and see if there's any text there and what it says. Speaking of YouTube, we are live and free. Once again, on the last day of the month, the last day of the quarter, a quarter that I understand is the very worst since 1987 on the US stock markets. Very interesting. And will it end that way? Well, I can't see it improving too much, I've got to say. But there'll be people who have differing ideas on that, of course. I believe that today is a day that we, well, Ash and I probably of a similar opinion. We don't normally have a lot to say or do on a end of month, end of quarter day, but this is different. We're in different times and we're experiencing different circumstances. So maybe there is a little bit to say. In particular, Ash, I know you flagged this yesterday, so I'll let you go through that. There were some interesting numbers come out of China this morning.
Yeah. Yeah, absolutely. Really interesting numbers. And actually, it leads us to a trade straight away. We're going to kick off.
It did me.
It did for you as well. Well,
Yeah.
well, we got a trade on the FTSE. So let me show you the screen here.
Sure thing.
And we're going to put an order in the market. So here we go. Oh, no. You might have to give me that screen, mate.
Yeah, I'll disappear for a while and I'll be back.
Well, this, yeah, hopefully not.
Oh, I'm still here.
There you go. You see, there might be the new way.
Must be.
So we are looking to go long the FTSE, looking good. It's been a long time since I've said that. We're going to go long the FTSE, 55.50, currently at 55.95. So if you are on the UK 100, then your price is around about 55.90. Something like that, 55, yeah, somewhere around about the 55.90. So looking to put an order in the market down here on this 15-minute bar here, just down here. Now the market may take off straight away, but let's hope it doesn't and gives us an opportunity. So I'm looking at between 55.50 and 55.65. Now, if it goes without me, I won't cry too much because I have got a stock that should react well to a market going up anyway. But I'm going to put my order in there. So let's quickly do that. What do we need? Been a while since I put orders in the market, but just so you guys can see it, I'll just run the process for you. Right, so we're looking at pending order, buy stop, buy limit, sorry. A buy limit at 55. Now I'm going, as I say, 55. Let's go in at 55.60 just to make sure that we get on board with this one, or give us a good chance to get on board with this one. And I'm going to place it there. Okay. Let's make sure that's there. Actually, let's do it a different way. Let's do it live. I think I'll do it live. So in fact, that's okay. As long as you guys see what the thing is, I don't actually need to do it like that. I don't like having the orders, and I'll tell you why I prefer to trade this live, because I don't want to leave my order there, miss it, and I want to see how this reacts early doors. So I'm a bit more analog, so I'm going to take this trade live. But that is what I'm trying to do. I'm trying to get in this area here. If you look visually on your UK 100, I'm trying to get into this area here. So if the market comes down, I'll take one here, and we're looking at stops probably all the way down here initially as well. So I'm going to give it some room. You could go under the daily pivot. That would be absolutely fine, giving you a stop loss of around about 90 pips, because it's likely to get back up to these highs, which should be a 1.5 to 1 before you need to be worrying about any kind of profit taking. So that is what we are going to do, mate, and we will talk about some of the reasons behind that. Here we go. Let's see if we get this trade on. Come back a bit for us. Come on down. This is going to be some of the issue, is that everybody's going to be getting in nice and early. Well, my worry here, mate, is it's going to explode to the upside, and we're going to miss the trade. So I might need to scale it in here. I think that's what I'll do. I'm just going to scale it in here just to make sure that we can get it. So I'm going to go down and just take half off. Now, if we break through this level here, I'm going to put half of what I would have put on for the whole trade. And if it comes down, I'll put the other half on at the lower end. There we go. What we got? Yeah, I think it's looking a bit keen. Seeing quite a few of the stocks in positive territory. So I am not in yet, but it looks like I might have to. Okay. I'm scaling in half here. So I've taken one in the market at this particular price point. I am long as we speak, mate. There we go. Roger. So I've taken the long here, but as I say, I'm scaling into this market. So if it comes back again for me, then I will put the other half on at this particular point. But I'm just a bit concerned that we're just going to start rolling to the upside and not come and test where I wanted it to. So it should do. If the market reacts as it often does in a trend, it should come back a little bit. But there's a chance that we miss that. So let's see if we need to get the other half on at the lower end. Now, if it doesn't come back, I will add the other half maybe if we start on the next dip. So if we do explode to the upside, the other half might go on at a slightly higher price. So we got half on here, but I'm going to scale in, and I think it's important to scale in because the market is still it's still a bit tenuous. You have to be very, very cautious here. But I've got some pretty strong longs currently in the market. Where's that going? Right, I'm just going to check also the barometers. So let's just have a quick look around the grounds. The gold stocks are still doing well. I've now got effectively what would be cyclical trades in the market as well. So here we go. So we are in around about this point here to the long side. Not sure why that is black. Let's change that back to white. Yeah, we're in about this price here right now at the long side, but I will, as I say, go in again down here. That would be quite a good spot. If that was to come back here and test that trend line, that would be even better. So a little dive to the downside would be good.
You probably scare a few our listeners, but that was the price you wanted in the first place. So
yeah, exactly. And the thing is, if I go in half here just to make sure I don't miss it, then as it comes back, if I add the other half, if I go full in here, that is just being irresponsible. Because really, this was the price point I'm picking out. But my issue, and the reason that I'm a bit concerned that we don't come back, is that if we look around, let's check what we've had with the markets, and we were talking about data points earlier on. This is what we've had overnight. So ANZ business confidence came in a little bit weaker, but this is where it starts to kick. Look at that, 52 from a potential read of 44.9. Now, not only is this a huge beat, but the significant part is that is expansion. So all of a sudden, yeah, I mean, expansion there, non-manufacturing also expansion there. So we are, there's no two ways about it. This doesn't mean all of a sudden that we've reached the bottom, and I wouldn't want to encourage everybody to think that we have, because I don't think we have. I think we come down a little bit lower. Now, the reason I say that is that China and Europe are only one part of the picture. I mean, when we're looking at all this, look at all this in the UK as well. Japanese housing starts pretty good number, well, certainly a beat anyway. German import prices not so good there, but current account in the UK shrinking, which is good for the pound in many respects, because one of the issues is while all this stimulus is being pumped into the system, can they afford it? And when you see the current account, then that's going to look a lot better for it. Final GDP quarter on quarter was not contraction as well in the UK, so that's a good sign. Revised business investment as well down a shade, and then we go back to Switzerland for some I guess lagging indicators, but retail sales holding up pretty well. Consumer spending in France better than expected, and actually better than previous as well. So some of these numbers are not only nice and green, but surprisingly expansionary. So this looks good today, and we want to be on board with this today. But we've got to make sure that when the week starts to really develop, these are the numbers that we next become interested in. So the ADP non-farm employment change in the US, ISM manufacturing in the US, these are going to be really important numbers as well now, because with China and Europe growing is a really good sign. But is America actually does that become the economy that is now problematic? So we are effectively going to wait and look out for that and make sure that that's not the case. So that's where we're at, mate. So not wanting to, and this is why I don't want to miss this long. That's why I'm keen to get in, even though it hasn't come back yet, because in some respects it probably did test these areas that I would have been more keen to get in around about an hour or so ago, just before we came on air. But now as I kind of look at this and we start to move to the upside, then it's going to be well worth just getting a trade on. But don't break the bank over it. Just make sure that if there's money on offer, that we can take advantage of it without being silly about it.
Okay, we better have a look at this pound breakout trade.
Let's do that, mate. Let's do that.
Okie doke. I shall wait for you to give me the screen, and away we shall go.
Why?
Okay, coming my way now. I don't know if you did anything, but it worked if you did.
Yeah, I eventually.
All right. So I've already placed the short order, and the short order is selling the pound at, what was it again? 1.2291. 1.2291 is our sell. Our stop loss is at 1.2380. So the long entry will be at 1.2380. Small loser yesterday. That's two small losers in a row, I think. We were going gangbusters prior to that. The stop loss is 1.2291. So there we have it. That is the buy stop order, which looks like it may not be required, as we're very, very close to that short. Once again, if I were trading this from a discretionary point of view, or even from an analytical point of view or a technical point of view, there's no way I'd take that trade. But that's not what we're doing here. We're trading a system whereby we expect to have a breakout of the previous session, basically, or the previous three candles of the previous session. So we're looking for either breakout short or breakout long, and we're really not taking into consideration any other filters at all. So if you're following this, that's exactly what we are doing. Once we are triggered short or long, we then cancel the reverse order. So in other words, if we get taken in short here, we'll cancel the long. If we taken in long, we'll cancel the short. Once we've done that, we will trail on a 15-minute chart, and I'll give you an example of that from yesterday's trade to show you exactly how that works. So yesterday's candle, the last candle is the 9 o'clock bar. Now that we're back on the right time. So 9 o'clock bar is the last candle that we look at in terms of the range that we want to trade. Don't forget, we're trading the range of the last 3 bars. Very clearly, that was simply 1 bar today. And yesterday, the 9 o'clock bar was that one. And once again, it was the range of the previous 3 candles. So that was the bar that we used to get into the market. As you can see, we got triggered short, or did we? Did we get triggered short? I think we did. I can't remember now. That was the candle that took us in. And that was the level. Well, let me find the level. $47, I think it was, from memory, something like that. So we got in around about there. You little scumbag. About there somewhere. Okay, so then we trail on a 15-minute chart. And that looks like this. So triggered in short here on this candle. And then it all went pear-shaped, but it went kind of nowhere for the longest time. So we're looking for, once we get triggered, we look for 2 seller bars in a row. And as soon as we see 2 seller bars in a row, we then trail the stop. Now our stop loss, I should put in our stop loss. Yesterday was 15 pips above there, so 43. That rings a bell, which is roughly there. A little bit under there. Okay, so go back to the 15-minute chart and you can see. Ash, where do you find the link to YouTube? Because I can't find the dash thing anywhere. It's
the dash.
driving me nuts.
What are we talking about? Sorry, mate. The link to YouTube for this show.
Yes.
I'll send it to you.
Thank you. And then you'll tell me later where you find the bloody thing.
Oh, I just put it. I just take it from the search bar at the top.
Okay, but yeah, I'll go through it later. so triggered here, we're looking for 2 seller bars. Once we get entered, we were entered here, we only got 1 seller bar. Then we got a rally. So the first 2 seller bars in a row that we got were actually here just before we got stopped out. I guess that's a good thing. That we didn't get stopped out there. But what happened, we didn't really have to move our stop loss too far. It maybe went down a pip or 2 when we got that 2 seller bars. Now, this one here, open was 21.4178, closed 21. That was a seller bar. That was a seller bar. So the stop loss comes down to here. Oops. There we go. So our new stop loss is there, and we got stopped out at that point. So, well, when I say it was a small lose, it was probably 2/3 of our risk. So not such a good result. Yesterday on the breakout trade, that is very much the nature of what we saw, because we went straight into a really lateral, if you like, market on pound US dollar. So, yeah, we go back a little bit in money there yesterday. Let's hope that's not the case today. And we are already short, I think, which is not a good thing. I don't know if we've been triggered or not. What's that telling me? That's telling me we are triggered. Okay, so we're already in the market on pound US dollar. And we're not looking that great at this point in time. Plenty of time to go. However, I didn't like the entry, as I said before, but you know, we're trading a system here, or we're trading a beta system. We're trying to work out how it all comes together. If we need to add filters, we will certainly add filters. One of those filters may well be do not go short at the bottom of a channel, which is very, very clear and evident on my charts. And for that reason, as I said before, there's no way I would look to go short here, especially at the breakout of the previous level. That's a dead set retest level and potentially a buy zone. So yeah, definitely not a, and even go again. You know, there's many reasons to think that this could rally. Base, higher low, higher high, higher low, higher high, higher low. There you go. So the question marks are all over that one. And for that reason, you probably wouldn't take the trade. That said, we are in the market. And if it goes down to here, what a great trade that was, is what we'll be saying, right? So, you know, it's very much a case of we're trading the breakout and nothing else. Absolutely nothing else. All right. So am I a pound bull or am I a pound bear today? Yeah, it's a tough one. It's the end of the month. It's the end of the quarter. We are in absolutely volatile central. And if I'm honest, I've got to think this has got more upside in it. But do I really want to trade that at this point without coming back to the weekly pivot, say? I think the answer for that, for me, is definitely no. But that means we'd have to break out of the channel as well. So there's a whole lot of questions. There's more questions than answers here for me at the moment on pound US dollar. And that's very much the case for a lot of the pairs. Mate, do we need to go back to you? How's that potential second entry going, or have you flown?
Oh gosh, no. The second entry will have to be when it comes back again. So we are currently in around about 30 pips of profit, which, you know, given the current market conditions, isn't a great deal. But we're not going to do anything until we touch a higher level. But yeah, by all means, let's come back and have a look at what the next course of action is likely to be here. If you pass me the screen again.
There you go.
Thank you, mate. Okay, so we are obviously long in the FTSE 100, just about this level here. It takes out this particular bar. Then you know, I'm not keen to add just yet because we are only in the first hour, and we have got this negative bar here. So if I blow this up a little bit, this is on the hourly chart. We do have this negative bar here, so there's still a chance we come down and get the second entry here. So what I'm really looking for, you know, this would be fantastic if it just starts floating to the upside to a degree, you know, less stressful anyway. So what we're looking for is the potential for us to hit this area here, and then start to come back and test the trend line and go. Now, if this becomes the same price as the first price, that's still okay to add the full on at that particular area there, and I'll be happy to do that. Because it's certainly looking like we're going to buy up into the end of the month at this stage. We've got. Mate,
if it broke the trend line, would you be interested in Ronald McDonald trade there?
What's the Ronald McDonald trade?
The big M.
Oh, I see.
Golden Arches.
What? As in, if it came down here, would I be looking for the short?
Yeah.
No, I wouldn't. I wouldn't be looking at the short there, and
okay.
and the reason that I wouldn't be looking at the short there is that you know, it wouldn't matter what this market did now visually for me. I'm only looking at the long because I have to take into account what is moving this market, and my theory really, you know, starts to come into play. You know, when you said it's the end of the quarter, it's the end of the month, that's so significant. You know, you do get sort of end of the quarter, end of the month. People kind of, you know, balancing up books and starting to kind of finish up their trading. Now, it doesn't necessarily mean that I'll hold it into Wednesday. I might even close by the end of today, because we do start a new month, and it might be that, you know, this becomes a bit of a relief, but we do actually start to move back down again off the back of this, and it's all going to depend on what price point we get to. You know, if we get up to this price point here, which is around about the 6,000 level, so we're looking at you know, 350 pips. If it gets there by the end of the day, I may look to either lighten up, or in fact, I will lighten up at that point. I'll move stops, a bit tighter, and I'll lighten up at that particular point. So I'm looking for about 350 pips to the upside here. But I'm not looking for the short at all, because those Chinese PMI numbers are healthy. They do look really good. I think this market and people are looking for an excuse to buy stocks, because that's what they do. And the other thing is that a lot of the news out of the UK is that there is a potential of a flattening of the curve, and it's the same in Europe. There's some of the European headlines are also a flattening of the curve, and I think
that's interesting, because that's a very fast turnaround, because it hasn't been that good since the weekend.
Unbelievable, mate. And now, don't get me wrong, I am still interested in shorting this market. No two ways about it. And the reason is because now it will change if the US numbers tomorrow specifically, and that's another reason I wouldn't mind lightening up. I'd like to see what those US numbers are from tomorrow, but I wouldn't be surprised at all to see us whacked pretty heavy with the US numbers tomorrow. So if that's the case, if we're whacked down tomorrow, then I think there's a pretty good chance this market does come down, make a new low, and keeps going. Because as you say, the turnaround's incredibly quick, and we know what the market psychology is. Market psychology is everybody's scared, it goes up. Everybody's confident, it goes down. Are we sort of like getting to a phase here where people are becoming a little bit more, almost overconfident with what's been going on? Because I don't believe that this thing is going to pass with one set of numbers as they have. Now, I do find those Chinese numbers absolutely fascinating. Let's have a look at.
Well, we spoke about it yesterday, and we said what the likely outcome of that would be. And my take is, I just want to be an Aussie bull. I don't know for how long. I think maybe for the duration of this now.
Yes, yeah.
China's got good numbers coming, then I think the Aussie's got a very strong potential to rally.
Oh, I think you're absolutely right, mate. And in some respects, that probably will be, to a greater or lesser degree, probably fairly well protected from the US numbers too.
Yes.
So I'm with you on that one.
It's all about China for Aussie.
Yes. But I mean, visually, it's just astonishing. How is the question? Have these numbers been skewed, or was the event so extreme that when we get a bounce back, the bounce back is this extreme? And I think that there could be an argument to be made for that. But it still looks like it still doesn't look right. It's like, how can you be all the way down here one month and then all the way up here the next? It just
it's explicable because if there is a total shutdown, then that's where those numbers are.
Yeah.
And if they open again, then that's where those numbers potentially will be. Yeah. But is it that clear cut is the thing? I don't know. It seems strange. I think it seems very strange.
Yes, it does. Well,
but I've got to trust the numbers, and if the numbers are telling me that, then I'm an Aussie bull.
Yes, yeah, and this is the thing. I'm completely in agreement with you. And this is the thing. I'm a FTSE bull, so I can't trade it to the downside, even if it's shaped up. To look for downside. I am second a technical trader. That's my secondary default setting is not to I don't like to trade. I don't like to trade in the opposite direction than my belief in the data points and the news and everything else is telling me, because I think that's just a dangerous play. I mean, technically speaking, I could have got into this a long time ago. When we look at this on an hourly chart,
it's a horrible psychological play as well, because it can really beat you up.
Yeah, I mean, this is the thing. I could have got into this long here. That's a higher low just there off the weekly. Off the weekly pivot. Could have got in there. I could have got in. I was talking yesterday at the fact that I think that the FTSE's holding up pretty well. And if anything, we probably would be looking at the long. I could have got in there as well. But what I didn't have was confirmation that things were turning around. This was still speculation for me. And I think that's fine. I'm not saying that people are wrong to get in here. And actually, that the technical, the pure technical analysts would have made money, and still be making money, probably, much better percentages than I am. But where I will wait for the fundamental kind of confirmation. In fact, I'll wait for the technical confirmation of what I believe is happening fundamentally. Then, inevitably you miss out a chunk of the market. But does that matter? What matters more to me is putting the right trade on and making money on the market, not getting every single pip out of it. And I think to a degree it took me a while to kind of to learn that mindset, because
it takes you forever. It's not an easy thing to learn at all. You don't have to be in those moves.
Yeah, this is the thing, and it's so. And the problem is when you have the mindset of, and you really have to make sure that you're checking your head, because when you have the mindset that you missed out on a certain amount of pips, or you didn't get in at the right time, and this, that, and the other, then the problem with that is that you end up kind of either coming out too early because you're trying to find the highest point, or you go in too early because you're trying to find the lowest point. So I think it's probably, there's plenty on offer in the in between phase of a market. So I'm not too worried that that I end up missing where I could have entered. There's no two ways about this, though. To be fair, those numbers were out at this point, but I just wasn't in front of the market at that time. And if I was, then I would have taken this trade a lot earlier, and I would be an extra 100 pips to the good already. So I did miss this entry, but when it comes to this point, it's still not a problem because we're still trending to the upside. So I'm a little bit late to the party on this particular analysis anyway. But I'm not going to try and pick this point out as my high. What I will do is allow the market to develop. And if we get to the end of today and we're at this point, then I'll be starting to lighten up, because we've got numbers out tomorrow. And I think those numbers actually could slap it in the opposite direction.
Yep, agreed with that too.
Yeah, the thing is, StarMax, UK fundamentals. Yeah, so I'm going long because of the China fundamentals, but UK fundamentals are Chinese fundamentals, and they are US fundamentals. This is one of the things. Hi, Rosalind. This is one of the things about markets, is that we can get caught up as much as we like if we're in Mexico, looking at the Mexican numbers, but realistically, that's not what's going to move the Mexican market. I don't even know what it is, the Mexican index. What will move the Mexican index is what's going on in the US. Jeff's been talking about the Aussie. He's not looking at the Aussie numbers. He's looking at the Chinese numbers, because it's the Chinese that make most of their orders from Australia. So if China is growing, then it's likely that there's going to be that knock-on effect. So, we don't have to get into the minutiae of every single market. We need to know America, we need to know Europe, and we need to know China. If we know those three markets, then we're in all the shape we need. Because remember, those three markets between them make up 50% of the world's GDP. So, in fact, more than 50% of the world's GDP. So, that tells us all we need to know about where the orders are coming in and where the manufacturing, is, and what kind of gauge that we need on the market. So, you can actually save yourself a lot of energy by not focusing on all the small. Don't get me wrong. There are going to be sort of like times where the UK will print a number and it will move the pound. Brexit, for example. But remember, Brexit's to do with Europe as well. And you'll see a retail sales announcement and it will move the pound. But very often, all it does is give the pound a little bit of volatility for 15 minutes to an hour, and then we're back to trend again. So, so the UK numbers, they have an element of importance, but they're not that significant. You trade the FTSE, really, you're trading the S&P, and I'll show you.
Speaking of which, mate, can you just have a look at the S&P? Because
I was about to. So, well,
I've got a message from Mark, and I've got no idea where it came from.
Okay. Well, look at the look at the FTSE. This head and shoulders pattern. Now let's put the S&P on. Pretty much the same. The only difference is the right shoulder is way up, but it's very similar. Look at the rallies happened at the same time. Hit that high, came down, and now we're moving higher. What was the point on the S&P, mate?
I just saw the message flash across and I thought it was aimed at us, but I don't see it in YouTube, so I've got no idea where it came from.
Oh, okay.
Mark was looking. I think he was looking for a short.
Okay.
You know Mark. You know who Mark is.
Yes. Yes.
Yeah. Have you got that message? You haven't got that message.
I haven't got that message. I'd be a little bit careful with a short. Personally,
Yeah.
Mark,
Well, obviously, I'm quite stunned, but anyway, it is what it is.
Yeah. Yeah, I'd be a little bit careful with the shorts in the market the way it is, mate, because it's on the move.
Well,
you know,
and look at that chart. You know, you can't go short yet.
no, I mean, and this is the thing about this is an area of resistance on the hourly chart, and I get that. But if you are shorting this, you are shorting it for a very short period, because all the shorts will provide is a long entry. It looks to me like we might even have a pattern going on here, probably. That looks like the pattern to me. So maybe even an ascending triangle. So yes, it could come back down to this point, but you're still looking at the long, even from that particular point. But my question would be, why would you look at the shorts in this particular area off the back of what we've just heard? There's nothing else that is suggesting that we should be moving lower except for a price point. And that price point, as I say, is much more likely to provide the bulls an entry. Yes, it could come down to this daily pivot. So if you're looking for it to come down the daily pivot, get that too. But wouldn't you be really looking for the daily pivot to go long to see if you can get through this particular pattern? Because if it gets through there, then we'll be looking at our measured moves being pushed up to around about 2860 on the S&P, and that on a weekly chart is back to these kind of areas here. So it looks like we're looking to test some potential levels here on the S&P to the upside. This market isn't really showing too much in the way of downside, in my opinion. But as I say, I get the technical reason. It's yesterday's high point that got refused. But at very worst, if it freezes here, I would still want to wait for those US numbers to come out, because if they are weak, then yes, we're probably looking at lower. But at this particular stage, I think we stick on to our longs right now.
Speaking of US numbers, a little bit of an announcement for you guys in a few minutes once I've been around the grounds on the 30-minute charts, because we now are in my trading zone, which is the second candle of London.
Yeah,
session.
Let's do it.
We good to go? Okay.
Yeah.
Roger D. Here we go. Let me start with the Aussie, because it's the Aussie I'm most keen on. The issue I've got with the Aussie is that it is at a resistance level, exactly the same as the chart that really you were just showing us there, Ash, on the S&P. We're at a resistance level, which makes it impossible for me to go long here. I just can't get in the market, no matter what I think. I just can't get in the market on that level. It doesn't make any sense to me. And the reason it doesn't make any sense to me is because if I trade at resistance or at support, long resistance, short support, I get burned many, many times and have done in the past. So it's just not a good thing for me to do. If I am at resistance, what I look for is a break of that resistance and then a retest of that resistance. So I don't want to get the first move. I want to get the second move. And that's the same in pretty much everything I do. I don't want to trade that bar. I want to trade this one, because that's where the confirmation comes in the higher low. And we're now getting a series of them on the Aussie. But there's a couple of things to take into consideration here. One is that resistance level that I just spoke about. The absolute bias for me right now is bullish. And I've said as much before the Chinese numbers came out, because I think the Aussie is now on a level playing field with the rest of the world. It's been under the most enormous pressure for the longest time, and we've seen it just crash and tumble and waterfall out of existence, or well, not quite out of existence, but you can see since well, all of 2018 and 2019, and now acceleration into 2020 with that incredible fall that we've seen from 70 cents pretty much right down to 54, 55. And now whether this is a relief rally or otherwise is yet to be determined, of course. In my book, it's otherwise. And because of all this pressure that the Aussie's been under, because of bushfires, because of all sorts of issues that we've had in Australia, not least with the economy, but that has forced the Aussie down. The strengthening US dollar has forced the Aussie down. But we saw that the strength in the US dollar has also crashed in the last week or so. And that is another reason why the Aussie has rallied, of course. And it's based, if you're looking at Aussie US dollar, naturally, if the US dollar comes off, then the Aussie's going to rally. So that's really not what I'm considering here. What I am considering here is the level playing field that I think we are now on, where we don't have bushfires. In fact, what will be happening now is the insurance money from the bushfires, which will be underwritten overseas, will now be coming back into Australia as everyone gets their claims through. So, you know, that'll be in the billions of dollars without question. So that really has an impact on the Aussie dollar, because to pay us in Aussie dollars as insurance claims, we have to convert whatever that currency is held in. It'll be US dollars for sure. Will have to be converted into Aussie dollars. So that's going to have, okay, it's not $1 trillion, but it is one factor that I'm taking into consideration. And as that money flows through, I think that can only add to the buoyancy or the potential buoyancy of Aussie US dollar, but also Aussie against pretty much any currency you care to throw at me at the moment. So I'm bursting at the seams to get long here, but I also have to correlate other information with that bias. And right now, all I see is we are currently at a resistance level. So I don't have a way in here, but as soon as I find one, I will be taking it. I love the fact that we're retracing right now. The really best play I can point to you guys to take, if it does occur, is if price were to come down to the weekly pivot, thereby breaking this trend line and then climbing back above it. You could even trade it for mine at the weekly pivot. It would be higher risk than the trade I'm about to suggest to you, but it's perfectly valid as far as I'm concerned. If you've got a reversal bar here, or a bar that suits you, that you trade normally, et cetera, or a setup even off maybe a intraday trade line or whatever the case may be. If you found a reason to go long here, then I think that would not be the worst case scenario. I'm even considering putting a limit entry order here to go long on Aussie US dollar. But there's going to be other opportunities on other currency pairs. And to your question, I can't remember who asked the question. Aussie, Kiwi. Where did I see that? It's gone. Oh no, there it is from FAD. FAD, look, they're not directly correlated, but gee whiz, they follow each other very, very closely. There are nuances that will make a difference from a fundamental point of view. Things like the price of milk, for instance, which is a driving force in the New Zealand economy. So there are little nuances between the Aussie and the Kiwi that do tend to come into play at times. Not saying this is one of those times, because the balance of trade is heavily weighted towards China, Kiwi, China, Aussie. So yes, I believe they'll move very, very closely together in the next little bit. But back to my point, there will be opportunities, in my opinion, on things like, well, in particular, Aussie CAD at the moment, unless oil rallies. So there's a caveat around that as well. But whilst ever oil is low and getting lower, you can pretty much look towards Aussie CAD, I'll put it that way, as being a buy. Things like Aussie Swiss and Aussie yen are a little bit more risky because we're still in a risk-off environment, in my humble opinion. Today may not be the case, and we've already discussed that because we are at end of month, end of quarter. We will have people trying to balance their books, and you can't get away from that. So we may well be in a risk-on situation today, but I don't see that lasting anytime soon. That kind of contradicts what I'm saying about the Aussie, because the Aussie is a risk-on currency. When there is risk on, people buy the Aussie, right? So I'm considering that that kind of counteracts my argument, but I still think, based on what I've said before, the fact that the Aussie has gone so far down for different reasons, and now if there's the possibility that China is recovering, and it certainly seems that way by the numbers, then I've got to be an Aussie bull. And if the US dollar continues to come off, happy days. Any opinion on US dollar Sing? I don't look at the miners. Ash might have a look at that in this session, Mike. But I will say this. What we are considering doing, Ash and myself, is having a second show on US Open each and every Monday, Tuesday, Wednesday, and Thursday. Now, that will not be a free show, however. So, you know, it'll be a very minimal charge, but we do have to cover our expenses on that. So I guess a question to you guys, would you be interested in subscribing to a US Open show? So this one will still be free and always be free, no problem. But we'll be doing very similar thing to what we do now as US session opens. That's a consideration. We told you that we have at the moment, thing called a 2-minute brief. That's proving to be difficult to administer from a subscription point of view. So we're really pointing towards going and doing a US Open session, very, very similar to this. So excellent. That sounds good, guys. Thank you. Based on your reaction, then I think we'll probably be looking at going ahead with that next week. Details to come, but I think Ash and I have pretty much convinced ourselves that that's the way that we need to be going, and hopefully we do that. Not clear on the pound US dollar trade. Could you talk about it, please? Yes, of course. Absolutely.
I was going to say as well, awesome. The stuff about the US show would be that we could also discuss a bit more about the trades that we're in. You know, if we manage to get a trade in the morning, then we can talk more about the management of those.
And also what it would do for me, Ash, instead of me looking at this chart, I would then be looking at these charts, which will make a whole lot of difference.
Yes. So we can look at the
I'll
miners.
be looking at all the miners as well.
Yeah.
So
yeah.
That'll give me a whole lot more. And I'll be able to put you guys into the trades that I'm in on the miners rather than than just the majors. Sorry, mate, I cut you off there. Was there more?
No, well, I was also going to say that oftentimes if there's no trade in the morning for the FTSE, then oftentimes the trade actually makes itself available on the US Open instead. So the possibility to get into more opportunities increases quite significantly, and we also get to look at the US numbers as well during that session. So I think it could be a really good show, and it could be really useful for everybody to really focus on the markets on the whole. You're effectively watching or you'll be part of the two most important times of the day, and that is the European Open and the US Open. So they really are the most important times. The Asian session is slightly less important. So we're really going to be able to get on board with the significant, potentially the significant moves and the significant news points, and we can share more as well. We can talk about indicators and all that sort of thing in that show, and as you say, we can talk about the miners too. So it's going to be more in depth, isn't it?
Oh, look, I've got to be absolutely frank. I generally go to bed just before in fact, probably a couple of hours now before US Open, because I'm busy doing other things during the day. I tend to get a fair bit of sleep. But in all honesty, I cost myself a lot of time, money, and experience by not trading the US Open, because it really is. If there's a second best time to trade, it is definitely US Open, and for the first hour of US session, because all the news is happening, guys. That's when the market's actually going nuts. So we really need to do that, and I'm happy that we've kind of made that decision already. Time, it is two in you guys' time. I think it's about 10:30 or something. Singapore, Hong Kong.
It'd be but between 9 and 10 at night.
Right.
So 9:30. Unless you guys have got daylight saving hours coming up. For right now, it will be 9:30 when the US market opens up in Singapore.
But we'll update you on that as to what time the show will be. So it'll be around about half hour before the US Open.
Yeah.
And we'll go probably for an hour, and if we're in a trade and need to manage it, then we'll probably hang around for a bit as well, if I can stay awake.
Yeah, okay, I think that'd be the deal.
The pound trade. All right. To answer your question, who was that? I can't remember now. All the questions. It's gone. Sorry, but I can't address you. Well, maybe I can if I go backwards in time. It was Rosalind. Hi, Rosalind. Okay, the breakout trade of UK session open, and I'll probably come up with one for the US session as well, is simply this. What we do is we take the last 3 bars prior to London session. In this case today, 1 hour bars, that is. In this case today, it was that bar, and that bar. And what the theory behind this is, when we break out to the high or low side of that range, we will keep going. That's the whole point of the exercise. So the breakout is actually a breakout. What we're obviously trying to avoid is a false breakout. Now, the way we trade it at the moment, and it's in very much beta mode, is we take the range of those 3 bars. In this case today, the range is clearly the high and low of the last 1 hour bar, because these other 2 are inside bars in reverse, if you like. So we then place a long order above this candle by 15 pips. So you can see that there, which is actually the stop loss for the short. We place a short order 10 pips below the low of that candle as it is today, but it is generally the range of those last 3 bars, and will always be, whilst we're in this beta test mode, the range of those last 3 bars. Once we get triggered, which we have been on this candle here, we then switch to a 15-minute chart, and we trail our stops on a 15-minute chart. So what we're looking for as a trail is 2 seller bars in a row once we're triggered. So we haven't got one yet. We've been triggered by this bar, and we've immediately got a buyer bar. So what we need to see now is a seller bar down here, followed by another seller bar. And as soon as we get that, we will trail the stop at or just above the high of that second seller bar. Oh, sorry, the first seller bar of the 2. So to give you an example of that, if we were triggered by this candle, for instance, this candle here, we would then wait for 2 seller bars, 1, 2, and we would put our stop just above the high of that second seller bar. Then if we got another 2, or the next one is a seller bar, but certainly 2 anywhere, as in here, we would then put our stop loss above the first of the 2 seller bars, and so on and so forth. So if we get 2 seller bars now, this one and another, we would move our stop to here. But we can't do that until we get the second one. We haven't got the first one yet, mind you. But that should be clear, and that's how we manage the trade at this point in time. But as I say, it is very much in beta test mode, so don't be putting any serious money on these at this point. We're trying to get to a point where we can say, okay, we trust this strategy this much, and we're happy to trade it at whatever risk ongoing. But we're not there right now. We're not at that point. Hope that helps. So I think everyone knows I'm an Aussie bull at the moment and waiting for an entry. US dollar CAD's interesting. That's the daily chart I'm looking at. We have got we've got an interesting scenario here. We've broken this support trade line. Got a little bit of a double top here on a 4-hour chart. I wouldn't really call it a double top, but there is the bearish engulfing bar there as well. So I'm happy to say that we've potentially got a potential reversal. Then we've got a lower high. We were looking for this for the last 3 or 4 days, and really there was one there yesterday. I suppose if you're willing to trade into support, I'm not, and therefore I didn't take that trade. But now that support's been broken and retested, I am interested. I'm interested now in trading this short. What do I need to see? I don't need to see too much. I've got to be perfectly honest with you.
You're talking about dollar CAD here, Jeff?
Yes.
Would you consider this trade if you've already entered the Aussie? What would be the process with that?
What if I'd already entered the Aussie?
Yeah, if you're already effectively dollar short.
Yep.
Would you also take another trade dollar short?
I wouldn't take this trade without now looking at oil, for instance.
Yeah.
Because if oil is about to put in new lows, then this trade is not valid for mine.
Yeah.
Because the CAD is so reliant on oil as a I'll call it a filter.
Yes.
I couldn't possibly go long the CAD whilst oil is falling. It doesn't make sense to me.
Yeah.
So that's why it's interesting. I would definitely look for a correlation between oil and this, but I like this scenario. So if oil was to rally in any way, shape or form, or come off the bottom or give us a double bottom or higher low or something like that, then I think this trade's perfectly valid, and it could go very quickly, because if oil does rally, I think it'll rally quickly. I don't know why it would rally, but if the chart tells me it will, then this does become valid, and I think we'll see that down here very quickly if oil can rally. That's why I'm interested in it, because I think it's got a long way to travel, dependent pretty much on what oil does, or if there happens to be some marvelous news come out on the CAD, because I still think the dollar is going to continue its weakness. I haven't had a look at the dollar index today, but the dollar index came off at least 50% in the last few weeks, and it has retested the breakout area. So I'm interested in seeing how low that can go. This, of course, all goes back to the correlation between the Aussie and the Kiwi and pound and euro. Everything pretty much is reliant, or all of those pairs are reliant on what the because they are part of the dollar index, obviously. That goes without saying. So yeah, I'm interested in the short here, but it is reliant very much on what CAD does, what oil does. Dollar Swissy, bigger picture here on dollar Swissy. We've been calling for this, but gee, we got it quick. It came very, very fast. We were looking for a higher low here based on bounce off the bottom of that range. That range is substantial. It's been there for a long time. So the bounce off the bottom of that range, to me, is significant. And it went a long way before it's come back. It's come back very, very sharply as well. And I don't have anything there on the weekly chart. The daily chart, yes, it does appear to be putting in a higher low, which is what I want, but not tradable. I don't see anything to trade there. 4-hour chart is difficult as well, because it's already bounced and formed, I suppose, this support level. I think if I were to see now a retracement back to the daily pivot and maybe a reversal bar there, I think that may be the way to get into this. Now I know it's dollar long against the Swissy, but it's technical only. I'm looking at technical only, and I don't know for sure that the dollar is going to continue to weaken, obviously. So if I do see that, I think it's quite interesting. The converse way to look at that, of course, is that we are now at a strong resistance level, which has been strong support in the past. So it's not easy. It's not a fait accompli. And as I said, had this gone down a lot slower and given me a nice swing earlier, that would have been the place to get in. So yeah, it's pretty ugly there right now. I don't like it because of that level. So I'll probably give that one a miss, actually. Kiwi, to go back to Aussie and Kiwi and their potential following of each other, or correlation, if you like, definitely there. What I do see here, similar to what I saw on the Aussie, is an untested weekly pivot. That spooks me a little bit. But again, I'm at resistance, so I don't really want to trade resistance long at this point. Love to see it come down to here and put in a reversal bar of some kind. Then I would be very interested in taking the long. In terms of would that suit me from a trade line confluence point of view? Not really, because it means it's broken this trend, or this trend line, if you like. It would need to get back above here, and that's a long way back. So I think I'd be willing to trade it to there from the weekly pivot. Again, maybe a limit entry order long, trading it back to the trade line or trend line. But I think that's as far as I'd like to go there before I took up a substantial amount off the table. The other way to look at it, if you don't want to consider that the weekly pivot does need to be tested, is if we broke under here, found support maybe at this level, maybe just above the weekly pivot, then got back above there and gave us room as it came back and retested this trend line. If it gave us room to take profit before these highs, then I'd be happy to trade it. But I've got to get profit in the bank before I hit these highs, because it's too risky to trade through them, certainly against the US dollar at the moment, because it does have a case either way. So as far as trades are concerned right now, Ash, I don't have a tradable candle, but that may change. Pound's going running away from us. I've got to get the Aussie down, and I've got to get the Kiwi down. And this dollar CAD is interesting because of the point that it's at. But no, don't see a trade at the moment. As you said, maybe that changes by the US session.
Yeah, well, this is the thing. I mean, it's a pretty slow-looking market right now that I'm looking at. I've got my gold stock surging currently to the upside without gold really taking off, and I'm going to hold on to my gold stock because I think it's a pretty decent hedge against the FTSE potentially moving back to the downside. So I'm just kind of like I'm just moving stops up very gently with that one. Looking at the S&P. S&P is still gagging to go through that upper bound that we were looking at earlier on, but it hasn't broken forward yet. FTSE had a small retracement, and I'm not getting in just yet. I'd like to see it a little bit higher before I add to this position, but that's still holding up pretty well. So the stock market, generally speaking, is looking fairly healthy at this particular stage. So we haven't really got, as you say, anything to do. If we've got trades already in the market, 85% of stocks currently posting positive numbers in the FTSE 100. We are looking at travel and leisure.
Do we need to see your chart, mate? We probably
do. Let's have a quick look, and this will just allow us to make a judgment on what we want to do here. S&P, this is what I was talking about here. It's struggling to get through that level. So it does look likely that there may well be some sort of retracement. We are in this FTSE 100 long, not having touched this area yet. I'm not interested in doing anything with this trade, but leaving it where it is. And as I said before, I'm even going to add to this if it comes down below the price point that I got in at, because I really want to get into a decent trade to the upside. But as Jeff has illustrated, this may not take off until the latter part of the day. You know, might be during the US session. Going to be interesting to see how the Americans react to the data points that are out of China. Interestingly, manufacturing PMIs, which is the Purchasing Managers Index, in China, very, very positive number and a worthwhile number to look at, but it doesn't really give us the picture of global demand. It just tells us that the purchasing managers are buying, which is a good barometer, but we do need to hear those US numbers tomorrow, because if the US numbers are weak, then that's going to affect other numbers in China, not those particular ones, but it might affect some of the other numbers in China. And maybe that's not why we're not really taking off here, mate. You know, I'm surprised.
Yep. I'm surprised.
I'm a little bit surprised, but
the Aussie hasn't taken off.
It could be a time of day as well, you know, and again, this illustrates why it could be important for us to all sit back down again for the US session and see where we are and reassess and reevaluate what we want to do with our trades. But for right now, I think we're in a pretty good position. Got along in the market, and so far it's not looking like that trend is reversing. So, you know, like you, mate, not a whole bunch to do. You know, that the current picture, the current barometers, the technical indicators, and the general kind of overview of market sentiment are all pointing higher. And the fact that it hasn't taken off isn't a really big issue. And as I say,
Dollar Sing. Someone wanted us to look at Dollar Sing.
Oh yeah, okay. Let's have a look at Dollar Sing. Let's analyze this then, and I can only really analyze this on a technical basis, because I don't understand what moves the Sing. I don't have a decent handle on what moves the Sing. You know, the dollar makes complete sense. We can look at the fundamentals with the dollar, but I'm not sure what it is with the Sing. So Dollar Sing has been pushed down. Now, if we take this from, let's take this from up to down. So we're going to start with a clean chart. On the monthly level, Dollar Sing is attempting to get back down to these levels right now by the looks of things. And it may even, you know, the way this looks, you can see that we're really midpoint between this point here at 144.60 and this point down here, maybe at 140, around about 140.50, something like that. Could be even down as low as 140, 139. So we're at midpoint. So that doesn't really tell us anything right now, except for the fact that we've taken off. So the price action is obviously bullish, and it has been this month. So it's obviously a buyer's kind of scenario that's been going on this month. This bar doesn't help, and it does suggest that maybe there's a little bit lower before we start to move back to the upside. The dailies are also not really helping. The dailies are suggesting that we come down here. So at this particular stage, I'd say on the short term, it looks like the Dollar Sing. Let's just check something. I'm just going to draw my level here. Yeah, I'd be looking for Dollar Sing in target of around about 141.25. Let's bring this over as well. 141.25. That's not a great deal on offer there. I wouldn't be looking to enter until 142. But let's just double check what the hourly is telling us. Little trend line down here. Yeah, I think I'd be interested in Dollar Sing short. I think it could be tricky because, you know, really we need it to retrace back to this trend line to get or somewhere near it, maybe, or, you know, equaling these highs before we really start to look at an entry to the downside. And it's looking scruffy. You look at this on a 15-minute chart. It looks like at this particular stage, it's a bit of a steer clear. You know, I wouldn't really want to touch that right now. That's pretty messy price action that we've got going on here. So if it comes up and pops up into this area up here, maybe testing these highs again, maybe even testing this high here, then I'd be looking at a lower high on the 15-minute chart, something like that, and looking to trade it to the downside. The only
I agree
way
with that, and the level I'd be looking at around about 157. Let's say between 157.55 and 157.75. I think that would be an excellent place to find a short. You'd want to be taking profit at 155.95, I reckon.
When you say it's at 140, 1.4, when you say 155, do you mean 1.455?
Oh, hang on, I'm looking at euro dollar sing. I'm starting to get excited about euro dollar sing. I'll have to switch over to sorry guys, I just clicked the wrong number, obviously.
There you go.
Very, very quickly. Dollar sing, where are you? Because I can't find it. There it is. Righto. Fibbo fans have been having a ball at that. I would imagine. Looks like a 38.2 Fibbo retracement. Is it? Might not be that fun.
Well, where we're at with this, that's a good point actually. Let's have a look.
Actually, it's nearly 50%.
We want it down here, don't we? Want it this way around.
Interesting.
Yeah, 1431. It's definitely a short. That's the first thing. On the short-term time frames, this is definitely a short. So I'll be looking at dollar sing to come down into this area. After that, we'd be really looking for it to go long if it breaks this trend line, but not before. So I'll be using this trend line just to have myself a little cage, just to make sure that that I'm not going to get caught off guard with that one. So
that level, mate, is 143.88 or 143.85.
143.88. Okay, let's have a look. Whoops.
I think that'd be a reasonable place to short.
Yeah, I agree. That would test us out around about these levels between these 2 points here. So I'd agree with that. I'd definitely be looking at. I would draw yourself a little trend line in, and when price touches the trend line, then you want to look for an indication that that you have a trade in the market, and the trade will be short unless it breaks through that trend line. For me to have a different view on this and maybe trade it in the opposite direction, it would have to come through that trend line and make a higher low without really piercing too far below that one. So I don't know exactly how shallow that would have to be, but maybe it comes up a little bit more steeply. But I'd kind of want it maybe something like that, and as it comes back, then I'd possibly you could look at the long if it breaks through, but still trading along the trend line in this particular area. I think this particular price point is the key area. So I'd be looking at around about the 143.70 area just as a key price point. Until then, I think you're in no man's land, because it could come down and check down here, or it could come up and check up here, in one sweeping move. So wait for the price points, and after those price points have been hit, which will get hit at some point, whether it's the lower or upper bound, then you can start to kind of sharpen your concentration and see if you do actually have an entry. But nothing before then.
Yes, Helen, happens to me often. Happens when you get older too, you just wrong chart. You eventually wake up when you work out that, hang on a minute, that shouldn't be that price. And you go, oh, okay, yep, wrong one. Thanks for coming.
Yeah. The amount of times that I've traded the UK 100 instead of the futures, and it's difficult because if you trade the futures, then when you're filling in your box up here, then if you put in 1, that equals £10 per point. If you get caught on the UK 100 and you put in 1, it's £1 a point.
Bit of a difference.
Oh God, I tell you, man, I've been caught out with that a few times. Sort of like putting in, thinking I'm on the UK 100 and then being on the FTSE, on the futures, and yeah, just kind of quickly having to close down the trades. And
you wake up if you have a look at your your win lot or your win or loss on that particular position, you soon get a little bit of a sweat up, don't you?
Oh yeah, yeah. It doesn't happen too often, but I'll tell you what, where the problem comes in. This particular broker is really good because the futures are the futures. Whereas if you go to some other brokers, then they actually give you the contract of the month. So you have March futures and then June futures. And if you don't call them up, they don't roll it over. But these guys just roll it over. They don't have a June contract and a March contract, and they don't go through the quarters like that. But my other broker does. I have to actually be really on top of which period I'm in. So there's times where it costs more to trade the futures. So sometimes, I might want to take a UK 100 instead. And that's where it starts to get a bit crazy. Even though I'm trading the same thing effectively, it gets a bit crazy because of the different amounts that you have to kind of plug into it. So yeah. And even my other broker, you put in one on that one, and that does actually mean £1 per. So yeah, there's sometimes there's other distractions that you're trying to avoid when you're trying to trade that we could really all do without.
Hell yeah.
Dollar. What would that be? The Malaysian rupee? Is that MYR? Is that Malaysian rupee? Sorry, rupiah. I don't have that cross on anything. I don't believe.
Do I?
Dollar Sing you may not get on IFS, Jeff. Is that right?
No, you would.
You do.
You definitely would.
Ringgit. Sorry, the ringgit. Of course it is. Yeah, I don't have a way to trade the ringgit. And I have to say, if you were able to trade the ringgit, I bet it's a cracking one to trade because the volatility is probably pretty high. So it's not ATW that doesn't carry it. It will be the broker that doesn't carry it. And to be fair, because I don't trade off when I'm showing you these charts here, I'm not trading off an ATW account. I'm trading off a different account. And it's a different broker, and they don't carry it either. Many of them don't. The IFS, this one do carry. This broker does carry the dollar Sing, but I'd say it's quite rare that you get the ringgit as an option. There will be some out there that do it, but I don't know any. I've got to say I don't know any that do offer that particular currency pair. Fusion that Jeff uses doesn't, I don't believe, trade the ringgit, but it will trade the dollar Sing.
Definitely.
It's just the ringgit's just too it's too minor for some of these guys to add to it, but it'd be a cracker. I reckon it'd be a cracker one to have on there because it'd probably be quite similar to the Mexican peso, where the movements would probably be pretty wild. Talking of movements, wild, mate. In fact, we probably should push off. But
yep.
Do you know what? Yesterday, I hit a point where I was just shivering. I couldn't get warm, and I couldn't feel if I had a temperature or not. And then this morning, I sort of yeah. Do you know? This morning I was going, I've got a bit of a sore throat, and I have to say I don't feel 100%. But it's what we were saying about before. I could convince myself I've got this coronavirus, and if it could be. To be fair, I might well have it. I don't know. But
it's the first thing you think of, though, isn't it? If you sneeze,
right now, yeah.
Oh my God, I've got coronavirus. If you've got a sore toe, I've got coronavirus.
Well, I've got. I might well have it, and if I have, then I'm thankful that it's quite mild for me at this stage. I don't think it is that, to be honest, because there are other symptoms that I'm not experiencing. But yeah, you get so paranoid in these times. It's awful.
Yeah, absolutely.
What was I going to say? Oh yeah, just finally, we were going to talk about volatility, and for that reason, I was just going to bring up a Bitcoin chart. So let's see what's going on with Bitcoin. We haven't talked about this for a while, mate.
No, we haven't. Probably good reason for that. I don't give a hoot.
Well, it's a bit of a mess, and yeah, it looks like the Bitcoin I think is quite an interesting one because it took me a while to figure out whether it was risk on, risk off, and I think it probably changes as the period goes. But it does across Bitcoin dollar, because as the markets come down, Bitcoin's also suffered. As you can see, if we look at this on a weekly chart, this is the week on week. Bitcoin's also suffered, and it seems to have picked up as the S&P has picked up. Just to bring the S&P,
I'll have a look at that versus the dollar index. That might be interesting as well, because that looks like it's following dollar index right now. In reverse, of course.
Yeah.
Right, are we out of here?
I think we are, mate. I think we are. Hold on to those FTSE trades if you've got them, and check out the end of the day. It's going to be quite important. Obviously, check out the US session as well and see where you're at. But if you are in a FTSE long, you should be around about 50 pips to the upside. You're looking for...
nice job.
Yeah, well, it sounds better than it is, to be fair, mate. I'd love to take a lot of credit for it, but it sounds better than it is, because 50 pips in this day and age is like it's like 3 in a normal environment. So,
yeah, the volatility gives you a little bit of a false impression, doesn't it?
Yeah, it does. It does. So, when I'm trying to sell myself, then I'll tell people that I regularly hit 50 pips and beyond a day. But but the truth is that is the environment we live in right now. So yeah, we're 50 pips to the good, and we're going to hold on to that one as long as we possibly can. So stick with it, guys. We'll be back.
Helen, the plan is can't give you details right now because we haven't ironed them out. But the plan is to do half hour prior to US Open, and at least half hour, maybe into an hour, into the US trading session. Very similar to this show. We'll be doing commentary. We'll be trading if there's trades, and we'll be probably going a little bit more into our strategies. And certainly for me, I'll be going into the miners that I don't do in this show. So if I've got a trade on, I'll tell you how and why into the miners, and that's pretty much where we'll be.
Yes, and if you've paid for our 2-minute brief to this point, then you will get the first.
You'll
month
be into
free.
that for free.
It kind of makes it, yeah. And we're going to start. We'll start Monday. It's a shame we can't start tomorrow, really, as it is the first of the month. But you know, lose a couple of days.
I can get a bit more sleep.
Not the first of the month tomorrow.
Oh yes, it is. No.
Yeah.
No, it's not sad that it's not happening tomorrow, because I can get a bit more sleep this week.
Oh, I see. I've
got to prime myself for it, right?
Brilliant, John. Yeah, John's saying it's the right time of day, which we figured it would be as well, because that's always been one of our challenges. You know, we're trying to get people involved when it's like 3 o'clock in the afternoon Singapore time, and you guys, generally speaking, in a normal environment, will be at work. So at least you can come back from work and actually take advantage of the timings and get involved in that. So, and it won't be. We are April Fools, Helen. We're probably not just April Fools, though.
February, March, May, June.
We are the 2020 Fools.
My mother's birthday, April Fool's Day.
What a great day for a birthday.
Yeah, it's locked away in the aged care unit. You can't see her or anything.
Yeah.
You know.
I bet you got us some pretty rotten presents in the past, though, Jeff. Played a few tricks.
Shit, yeah.
So I can't remember what I was saying, but we will be back same trade time, same trade channel tomorrow. Before we go too much off on a tangent, let's wrap it up, and we'll be hoping to start the new format next week. As Jeff says, it'll be a small charge, but it'll be relatively inexpensive. We believe we're not going to be sort of going to try and squeeze everybody for any money they got,
especially in this climate. That's not what it's about. We've got to cover some costs. That's all.
Yeah. Okay, great stuff. Yeah, nice one, Lewis. Okay, we will speak to you all tomorrow. Same trade time, same trade channel at 5 to 8.
That's a date. Don't be late. See you later, guys.